Hello and welcome to another update video about AVAX. AVAX, one of the stronger performers of the last few days. We have two main resistance areas that we are watching on this chart. The first one is still relevant. Price briefly broke it, but never really broke and sustained above it. And that level is at $18.54. So this is a key pivot. That only if really broken allows us to look towards or look up to the area between $36 and $82, which is the next key pivotal area that the price can reach, but only if $18.54 is overcome. They are important levels because as long as we don't really break above $18.54, it is possible to move down directly from here. Yeah, I have already changed it to this wave count in which a larger wave 2 is possible. As a larger 3-wave move, it can always turn into something more bullish, but due to the overall context of the chart needs to prove that to me. Okay, that's sort of my mindset. Yes, we are focused on upside. Yes, 2 weeks, 3 weeks ago, I did tell you pretty much around the low that this wave 2 has likely started and that we're likely going to reach the first resistance area, possibly the next one, but we will only know that if we see a break above the first one. So it's all going okay at the moment. So the uptrend is not broken. We need to see next, obviously, a sustained break above $18.54, obviously coupled with a break above the last swing high at $19.66, which would then also take us eventually, ideally above $21.60, which is sort of this resistance range. Yeah, it's a bit of a range. Okay, it's a bit of a range. So the difference is we have structural resistances here. To be honest, I will make that box now smaller because we're already at the 78.6 fib. I just want to show you the key Fibonacci level here because we haven't really broken it. Just a move above it and a reject or rejection doesn't really indicate we have broken and sustained above it, right? But this here is structural resistance. So I will just show you right now. I won't leave it on the chart, but there is structural resistance here, basically between $20.60 and $22.70. So there are lots of peaks, you know, that the price has not managed to get above. So I will be watching that area as well. This is going to be the next key area that the price needs to work through. To be honest, maybe I leave it on the chart, but I will highlight it in red. Structural resistance, okay? And then above that area, we are watching for the price to reach this larger retracement area, which is between $36 and $82, with a $50 level in between. Why is this area important? It is important because the move to the downside can be counted very, very clearly as a 5-wave move, okay? So we have 5 waves of the November 2021 high. So this means I'm counting this as a wave 1, the move up currently as a wave 2 in a so-called flat structure in which the C wave could still move a little higher. The problem is because we are moving against the larger trend most likely, the situation isn't crystal clear. Yeah. So the situation isn't very clear because we had an overshooting B wave to the downside. And the C wave, first of all, whatever's happening right here, I'm counting that as a C wave impulse in wave 2. The problem that we have is that this wave C doesn't really have a great structure. So it's very difficult to see what's really going on a micro level. It's also the case that in such a flat structure, sometimes the C wave doesn't exceed A, which topped here around, $22.70. So that's why this resistance area is so important. Now, to keep it very simple, the trend is currently up. We only have 3 waves up. And we need to understand which level needs to hold to keep the upside pressure alive. And because we're likely moving in an impulse in wave C, I would be using the 50% retracement level of that entire distance to understand when the trend is likely changing. And the support level that we're dealing with here is at $13.06. That's the 50% retracement. $13.06. As long as this level is holding, the focus can be on higher. Okay, so I would pay attention to that level. A break below that level doesn't invalidate any possible upside, but it basically makes this move to the upside lose its impulsive potential. So if we're really moving up here in a 5-wave move as sketched out, then this wave 4, should it start at some point, should never break below the 50% retracement level. If it does, we can't trust this move up anyway. I mean, it's already an awful structure here. Yeah, I know everybody likes to chase green candles, and this can still move up higher against the support level I indicated to you. That would be the expectation to get a full C wave. But the problem is it's just not a high quality chart. That's the problem. It's not a reliable chart. There are typically, there are clearer setups out there at the moment, and this is a counter trend move. It can turn into something more bullish, but it needs to break above $82 to really confirm that. This here is a 3-wave move to the upside, which always leaves a lot of room open for discussion and different interpretations. Nobody knows. I mean, this could turn into a large triangle. This could turn into a lifetime downtrend. It could turn into something bullish, but because we have 3 waves up, 5 waves down, which indicates actually the trend is down, it would need to break above $82.20 to, clearly favor that, because this wave 2, shouldn't really break above $82.20. If it does, it indicates this might not be a wave 2 and something more bullish might be at play. So while I'm tracking here for risk management purposes on the larger time frame a bearish scenario, I am tracking a short-term bullish scenario, which is this C wave. And if something more bullish turns out from there, it becomes something more bullish and breaks above all the relevant pivots, fine. I'm happy for it to go to new all-time highs. But the mindset here, at least my scenario, assumes that it has to prove that to us. Okay, so I'm not calling the market here or anything. I'm simply highlighting the trend, and I'm highlighting the requirements that the market needs to fulfill to change the trend, to give us confidence that AVAX is moving into a long-term uptrend, not just a short-term uptrend. In the short term, it doesn't make a difference anyway, okay? Because let's assume it's on its way to all-time highs, then the short-term trend would be up now. If it's filling in a bearish scenario overall, then also the short-term trend is up, and we expect the price to go higher short-term anyway. When we arrive up there in the resistance area, then we can deal with the question, okay, is this turning into something more bullish, or is this just a wave 2 corrective rally? That's my update about AVAX. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.